Moments ago, President Trump weighed in on whether the White House is considering an additional stimulus bill after record job losses in April.
We're in no rush. We're in no rush.
When you see jobs,
the Democrats have to do what they have to do, but I would say we're not looking. We want to see what they have, but I can't say that we're in a rush. We were in a rush to get the money out to people. We have gotten the money out. Some money is stalled because of state machinery. You know, they have old computers, 45-year-old computers, and we said this was going to happen.
Let's bring in our Kayla Tausche along with Michelle Meyer, head of U.S. economics at Bank of America Merrill Lynch. Kayla, we're in no rush, echoing what Larry Kudlow, his economic advisor, said earlier. But didn't we learn today that there's a lot of pain out there and a lot of people need help?
There is a lot of pain, and it also goes against what the president said just a few weeks ago after that expansion of the small business loan program was signed into law. The president said that negotiations were going to begin immediately on another wave of stimulus. But there's concern inside the White House that so much money has flown out of government coffers and that because it was released so quickly, they need some time to study exactly which programs are effective and how they can make future programs even more effective. They want to make sure that they're not exacerbating any existing problems and creating new problems with unintended consequences of some of these packages. So there is going to be a pause of sorts of several weeks. But that being said, Democrats in the House are expected to release a draft bill early next week that's going to be seen as a marker of sorts. It's going to be a grab bag of Democratic priorities, and it will likely get passed to send as a symbol to the White House and to send a message that this is the beginning negotiating stance of Democrats when GOP leadership enters the conversation, when the White House and Treasury enters the conversation, so they can put down their marker of what they want and try to work from there.
Michelle, should the administration be in a rush to get more stimulus out there? Or what do we learn from this morning's numbers?
I mean, certainly there should be the conversation underway. This is an incredible shock. We had over 20 million people displaced from the labor force have lost their job, a big surge in the unemployment rate. So there's a lot that's been done already, and that is all very helpful. And it's starting to show through in terms of stimulus checks being distributed, consumers having a little bit more purchasing power. But I think there's two main points of focus. One is around state and local aid, which has been an area that's been made quite clear is a potential sign of real stress coming in the next few months. And then the next question is, what's that second phase look like in the economy? So they've put stimulus in place to stabilize, to offset some of the hit to the private sector from the decline in income. But what about actually creating some real stimulus into the summer and into the fall and getting a more sustained and healthy recovery on the other side?
Well, to that point, Kayla, when do these current programs expire? PPP and unemployment benefits, which are designed to help bridge this gap and help people, some of those unemployed that we saw in today's number, get back on payroll. When does all that run out?
Well, there are different durations for different programs, Sarah, and for the small business program, it really depends on a business's cash flow. The period in which they have to rehire some of those employees is 8 weeks in order to be able to say to the Treasury Department and the Small Business Administration that loan should be forgiven. They have to make an offer to rehire some of those employees in that time frame to be able to get that loan forgiven. But how long that loan lasts really is dependent on what a business needs to use that money for, how much its mortgage or rent is, how much it owes its vendors on any given day, on any given month. So that's a business by business issue. The expanded unemployment benefits, that's going to last for about 12 to 13 weeks. So, you know, the Treasury Secretary has said that this is a roughly 10 to 12 week package, but Americans are finding that their bills are stacking up, especially if they're not able to replace this income.
Mike, is the market today saying that as unbelievably shocking and tragic as this number is, we were expecting it to be even worse?
I'm not sure if the market was expecting it to be even worse, but this was right in the zone of the magnitude that we were expecting. We were in a period here where you have 33 million unemployment claims in, I guess, 7 weeks or something like that. And there really was not going to be much of an offset in terms of net new hiring to really change the magnitude of those numbers. So that's why I don't think there was a lot of suspense in this number. You even have some people saying that the unemployment rate for various reasons might even have been lower than folks thought. But I think it's more a matter of the market's been operating on the assumption that there was a sudden stop, a shock to this economy, and that it probably bottomed in the middle of April in the absolute worst of it, and slowly, incrementally, maybe it's coming back to life off an extremely low base. And this employment report more or less fits in with that assumption. You know, nobody knows how fast we get back, whether there's going to be hiccups along the way, but I think that the jobs report itself didn't have a whole lot fresh in there versus the standard view.